How to do a deal.
How to do a deal. My favourite activity.
I knew it would be down your alley. The reason why I say this, because I had caught up with a gentleman who owned a car wash.
Oh, yeah.
And before we get to the car wash, I guess we all do deals on a daily basis. When we're buying a car, we go to a car dealership. We look at the price sticker on the window. It's 19 grand, and by nature, we're never going to offer 19,000. We might say 18,000 or 17,000. We usually pull out our phones and go to carsales.com and go to great lengths showing the car salesperson, well, it's not worth 19, it's worth 18 or 17,000.
Yep.
Same applies when you're buying your home. Although buying your own home, it's a bit more emotional. And some of us tend to overpay, which I understand this. If your wife loves it, if your children love it, you tend to go for it. Investment properties, not so much. But we all know how to do a deal. But here's what I see is the biggest issue. Outside of those two things, when it comes to doing a business, people sort of like back off because I feel as if they need some sort of a skill set to proceed. Do you think that's true, that people need a skill set, or is it a game changer?
I think it's a combination of skill set and desire. How bad do you want that outcome? And are you of a nature that you leave no stone unturned to get that outcome? Are you of a nature that you're relentless and failure is not an option? You've got to have that type of DNA in you. But if you just accept mediocrity, if you just accept, I tried and couldn't get it, so
let it go,
then that's a mindset. That's in you. Yeah. It's very hard to change that.
Although when people want to buy their own home, they're very dogmatic and they're very emotional and they tend to exhaust all avenues. But when you swap the tables and all of a sudden it's a business or it's an ASX company that we want to research on the market, people back off because they feel as if they don't have the skill set or don't have the knowledge. Now, why I bring this up, a couple of weeks ago, I had to wash my car.
Yeah.
And I was in suburbia Melbourne and I saw a car wash popped in and after I gave the keys over to the gentleman, went and grabbed a coffee, sat down, and within 5 minutes, the owner, was a middle-aged man and came and spoke to me. I commented of what a great business he had, and one thing led to another, and he basically mentioned to me how he would have loved to buy the business down the road. Well, there was another car wash business, which was about 1.6 kilometres down the road. And I said, well, why are you so hot on the car wash business down the road when you're doing so well? He said to me, well, within a radius of 7 to 8 kilometres, there were only 2 car washes and they happened to be on that main road.
Right.
And I said to him, so what stops you buying to go and approach that gentleman? He said, well, mate, I can't get the funding from the bank. I'm mortgaged to the hilt. I've gone to private lenders. No one can give me the money. And it's just a useless exercise. I said, mate, it can't be a useless exercise. You have to look at other ways of doing it. Now, I'm not going to tell you what I said to this gentleman because our podcast is based on not knowing what we're going to talk. Out of curiosity, what would you do if you want to buy the business down the road? Now, I'll put a caveat. He mentioned to me that these businesses are usually sold on a multiple of 4 times.
Okay.
Do you want to explain what a multiple of 4 times is? Because most people get a bit confused of how to value a business.
Yeah, so multiple of 4 times effectively means, let's say hypothetically this business makes 250,000 of profit, 4 times 250 is $1 million. So when you talk about multiple of 4 to purchase that business, you're spending $1 million to buy that business.
Okay, so he's given me the multiple. And the biggest selling point is not only the 7 to 8 kilometres, but they're fighting to get business, even though both car washes are actually busy.
So there's a bit of a price war, is it?
Bit of a price war, and I only paid, I think, $28 or $29 to do that car wash, whereas most other suburbs, or where I wash my car, and we're talking about hand car wash now, you can pay up to $40. So he could see that there was room for improvement. Out of curiosity, knowing that the bank's not going to fund you, how would you go and do a deal with that gentleman that is not selling his business?
Yeah, so there's a number of ways you could tackle this. And I hear what you say about the bank said no and private lender said no, but I'd love to understand when he says private lenders.
What does that mean?
Yeah, what's his network?
He mentioned solicitors' funds, and solicitors usually ask for hardcore assets, and that's usually bricks and mortar.
So the private lender market has a lot more depth than just solicitor funds and whatnot. And so the one thing I would advise is talk to a debt advisory firm. because they have avenues of raising funds for these types of situations. So I would exhaust that first. If that still came up with no, then that doesn't mean it's the end of the game. It just means you've got to go to the next level. And the next level is go talk to the the owner of the other business, and profile that person. Understand, are they in distress? Are they tired? Sometimes people are tired in business and they've lost their motivation and they really want to go do something else. How old is that person? He could be 60, 65 and would love to transition to retirement. Whatever you can, as much information as you can gauge out of that situation, you should. And then profile them. And so the option A, once you've profiled them, and let's hypothetically say he's open to a discussion. Because if he doesn't want to sell his business one iota, it doesn't matter what you come up with, unless you're going to pay a stupid price, you're not going to budge him, right? But let's say he is open to it. So then you could explore a couple of options here. Number one, offer that person vendor terms. And vendor terms effectively means that the vendor of that business, for a given interest rate, will sell you the business. They'll want something up front, and then you can use the cash flows of the business, which is guaranteed by the business, to pay them over a period of time. And that could be quarterly installments for a year or 2 years, depending on how much you owe them and over what period the business can support the cash flows.
So in this example, we can hypothetically say if we can come up with $250,000
up front,
we've got a $750,000 balance. We would have to pay a rate of interest to make it.
And just for simplicity, it's 10%, which is about 2.5 times,
to make it attractive to the vendor.
Yep, to make it attractive.
And what term do we use?
The term is an exercise of your cash flows. So you don't want to set up a structure that the terms can't be supported by the cash flows of the combined businesses over and above your
because it's not going to work.
Yeah, you're going to blow yourself up, right? So if you need 2 years to make those for the business combined cash flows, the free flowing cash flow to pay that, then you do 2 years. If you can do it at 18 months, so the shorter the time frame, the less interest you're going to pay.
Oh, okay. So are you saying, for example, if it was 4 years, possibly the rate of interest could be 12% as opposed to 2 years, it could be 8%?
No, I don't think you'll get 8, but it's really just the journey. So let's keep it at 10 for argument's sake. But if it's 3 years at 10%, that's a lot of interest as compared to 18 months at 10%.
Right.
Because it compounds, right? So it's a bit like a lease payment, a home loan. The quicker you make your repayments, the better, right? So that's option one, right? And let's say hypothetically this vendor is not open to that.
Can I just go to option two? So the vendor who's accepting $250,000, there's a $750,000 balance, and they can work out with cash flows of both businesses, whether it's an 18-month term or 24 or 36 months. If it doesn't work out for one reason or another, then the assumption would be that even though the vendor's got the $250,000 upfront payment, which is 1 year's cash flow, he could virtually go and grab his business back.
Yeah, take it back because
that's his security.
Because the vendor terms have been defaulted.
Right.
Now, that's very simplistic. There'll be lots of legal jargon and clauses that mean you have to follow steps to do that. But the upshot is, yes, you could get your business back and you keep your $250. And even if the next installment was paid and you got $500 and the balance doesn't come, you get to keep your business. It's guaranteed by that, right?
So it's a good deal.
Yeah, for
both parties.
As
long as it's a win-win.
Yes, yes. So that's option one. But there are some vendors saying, why would I fund you you to buy my business? You can't write the check, so why am I funding it for you? No, I'm not selling it. If I want to sell, I'll just go to the open market and I'll get all the cash up front, right? Which they're entitled to say and do, right? So that doesn't mean you're defeated, all right? That means, okay, he's not open to that. But he's happy to sell, and there's a deal to be had. So next thing, you've got your business. And so the option there is, okay, number one, can I get a convertible note on my business? That's option one. And then you can talk to financial advisors, capital raising people, debt advisory people for that. And for those not aware what a convertible note is, it's effectively a debt instrument that converts to equity by someone's advocacy. And so in this circumstance, you might just say, oh, I need the mill. I don't even have the 250 for the the upfront component, so I need the full mill, and I get to buy that business. And so under that convertible note, it's not dissimilar to the rates on the vendor terms.
So 10%
you're probably
again?
looking about 10%.
Yep.
And then you get the money. And so the way the convertible note, depending on the term, so it could be 1 year, 2 years, 3 years, and then at expiry of the convertible note, it either the deed of the convertible note will either say payment in full, or conversion into equity of that business at the lender's discretion, or at the business's discretion. In the current market, you don't see very many where it's the business discretion. You see mostly where it's the lender's discretion. That's just the current market.
So the people that offering the convertible note, the power's with them.
Yeah. So if you've grown your business and it makes sense for them to convert because the equity's worth double than you paying it back, then they have, but you got to remember they helped you get to where you get to. Of course, yes. So you can't be begrudging of that. But yes, they potentially have the right to do that. I've got to say, in private businesses, it doesn't happen as much than it does in listed world, but it can. And so that's option one. Option two is you find an investor and you divest a percentage in your business. And so you still have control. So you might divest 40% of your business, and you've got to find an investor, do it at a valuation that is attractive, but equally gets you the money to go and buy this other business. So that you land with where you own 60% of your business.
So you've still got control?
And 100% of the other business. So that's an option to explore. Some people say, I don't know any of those people and whatnot. Once again, go to firms who have investors, high net worth investors that are looking for these types of opportunities. Now, I know car wash probably doesn't sound very sexy, but you're using that as an example. But the theory can go across anything, right? It doesn't matter what business you're in. That potentially there's always someone that's interested in your business if you're successful to invest in it. The other thing I would encourage business owners to do is join groups where there's other business owners. There's lots of community groups out there. You pay a subscription fee, but they're like-minded people, and you join groups. You might be into car washes, and then you get the vacuum guy and the carpet guy and the carpentry guy, or whatever the professions that you get bracketed
and
to.
And you're networking.
And you'd be amazed that if you befriend these in these networkings, some of the money might come from those networks because they might be more progressed in their success of their business and their journey and whatnot.
And they're looking to park their money in businesses with strategic growth and great returns.
So you just got to, and one thing I encourage people to do is don't be short-minded that if I can't get it done in the next 5 minutes, I'm not going to get it done. You've already know this guy's prepared to sell. Now you might have to wait 6 months before you can rattle the tins to get it all together to couple the money to pay, right? But have the plans, do your networking, talk to the debt advisory, all those ideas that we tabled. Just leave no stone unturned. Just hustle. That's the way I would go about it.
So it's funny because as I was continuing this conversation with this gentleman, where it all fell apart for him, he went to his accountant.
Ba-bong.
And apparently, I've got great respect for accountants and financial planners and lawyers and all that sort of stuff. But the response from his accountant was, well, mate, if your bank's not going to give you the money, what do you think they're trying to tell you? You can't do it, so forget about it. Pipe dream. And as he was telling me, I've gone, oh, no, you're kidding me. He's just cut him off by the knee. So sometimes when we talk to professionals that we seem to think they have the knowledge or they have an angle how to get things done, that's not necessarily true.
In most cases, it's not true because the people you want to be talking to have to, in my opinion, have to have a bit of an entrepreneurial flair about them. And no disrespect to accountants and lawyers and whatnot, but they're not entrepreneurs. 2 + 2 must equal 4 in their world. Just the way they're built and their DNA and whatnot. Where in my world, 2 + 2, what number would you like it to be?
3, 5, 7.
Yeah, it can be any number we want, right? We just have to get there, but it can be any number. And so that attitude is not a part of an accountant's thought process. A financial planner's, they're very methodical in nature, and so they report numbers. They don't create deals for you. So you got to put yourself in environments where you're dealing with people who give you ideas.
So just that response from his accountant, Mark, stops him, and he forgets about it. And I've asked him just one simple thing, mate. Have you actually gone down a road and approached him? He goes, well, no. And I thought to myself, isn't it amazing? You're depending on other people to acquire information or knowledge that might be detriment, and yet you won't walk down a road 1.6 kilometres. You've just told me within a radius of 7 to 8 kilometres, there's only 2 car washes on the actual freeway or the highway.
Yep.
You can comfortably increase your prices on the car washes.
Well, I was about to ask you that. So
Comfortably.
that's going to be outside of any synergies.
Comfortably, because
and
I
so
paid,
that's-
I think, $30, and most car washes now are charging closer to 40. So there'd be no problem about
So that's a
increasing.
30% increase.
It
So
is.
let's say even he did a 20% increase, that's all going to flow to his profit.
Down bottom line.
Yeah, and so his ability to have the cash flow to pay the business
No
off
issue.
and whatnot, as long as he keeps the same, even if it's that same market share, doesn't grow the market share, but achieves that extra 20% revenue, bang,